It was in 1902 that one of the richest persons of that time, John Rockefeller, created what we know today as the school system. Now, this system wasn't created to help people grow financially or to educate them in the right means, but it was created to construct nations of employees or workers. You see, Rockefeller was an oil tycoon who needed an army to work hard for his empire. This is why people hardly talk about financial well-being, and it has become such a taboo topic to comment on. This system was designed to program people to work 9 to 5 for someone else's business and hence save only a handful amount of money, which after retiring at the age of 65, they can't make the most out of it. Investing in dividend stocks is a great way to get out of Rockefeller's trap, especially when it comes through stable dividends. In this video, we're going to show how you guys can earn passive income through dividend stocks and live off investments. Understanding how dividend stocks can bring stable income for you has become extremely important, especially considering the growing inflation and the situation it has put us in. So make sure you watch this guide to learn how you can retire early by investing in dividend stocks and get out of the rat race to live a peaceful life. Welcome to 5-Star Finance. To live off dividends and retire early, the first step is to define how much money you need to invest per year to generate the requisite income. Now, there are always going to be two types of people in society. The first type of people are not into expensive things like buying the latest iPhone or spending money shopping from Louis Vuitton and planning a trip literally every month. No doubt people belonging to this type need big stacks of cash coming from their dividends. On the contrary, some people don't spend that much money and are really into the habit of saving money. For the sake of the video, we're going to target the average person. According to the US Bureau of Labor Statistics, the median wage in the US lies around $49,974 per year. So let's round it off by saying that the average person lives off $50,000 per year. We need to remember that we're not using all of that money to live off, because some of the money is going to our education fund and some of it is being spent on food, some on investments. So let's just say that we're using $30,000 to live off each year. So we need $30,000 in dividend income each year to live a financially free life. So what's the goal? How much do we need to invest in stocks to earn that $30,000 of dividend income each year? Firstly, you'll need to determine your investing strategy. Are you going to go for those high yields, or are you going to settle with those low yields? Let's just say that you decide to target some companies from both of the categories and start investing. Now, you want to target those companies which are paying nice dividends, but at the same time, they're also reinvesting something back into the company so that the business keeps growing. You want to make sure that the company is not paying all of its earnings as dividends, because that's a major indication of a downfall. A perfect example of such dividend stocks can be Warren Buffett's Coca-Cola. Buffett bought some Coca-Cola stock back in 1988 because it had a strong business model as its foundation. Customers loved their products, so Buffett cashed in on this stock big time and bought some 23.35 million shares of this stock by 1989. And these shares were worth $1.8 billion. And we all know what happened next. That $1.8 billion ballooned into a gigantic sum of $19.4 billion plus. Not only did his share price increase, but his dividends were standing somewhere at $7 billion as well. This is a perfect example of getting those dividends as well as growing the company. So let's get back to our investment strategy. We're targeting the companies that have fine business models along with hefty dividends being paid out to their investors. But the question arises, what do we consider a nice dividend yield? Now, before we start considering dividend yields from various companies, we need to see the dividend yield from the S&P 500, which historically lies somewhere at 2%. That means anything above 2% means a green light. But when we look at the S&P 1500 Composite Index, which has increased dividends consistently for the previous 20 years, currently yields 2.92%. And then we have the Vanguard Dividend Appreciation Index, followed by the NASDAQ Index, which pays 2%. And lastly, we have Schwab Index, which focuses on the bigger dividend stocks, and it gives a yield of 3.6%. This means that the average dividend yield lies somewhere around 2.84%. But after rounding that number up, we get 2.9%. But the big deal is that we think that one can achieve a dividend yield higher than 2.9% if the money is invested properly and vigilantly. But let's be conservative here for the average person and say that we achieve a dividend yield of 2.9% for the longer term. So how much do we need in total invested so our dividends replace our income? As we decided during the start of the video, the average person lives off $30,000 per year. So we need 2.9% of our total amount invested to equal $30,000. That also means that all we need to do over here is some simple algebra. We need to divide 30K by 2.9%, and we get a figure of $1,034,500. That means you just need a figure of more than 1 million invested in dividend stocks to retire early and start living off your investments. Now, we understand that most people out there will think that it's unrealistic to save up a figure of over $1 million. Secondly, some people might say that, hang on, I want to live off something more than 30K a year, which is a fair point. So let us answer these questions. The first thing is the silly statement we hear most people think, and that is, we will never be able to save more than $1 million. And that's the same group of people who look up a mountain and think it's impossible to climb. What they're saying is that they don't want to put in the effort or the time to climb the mountain. One thing or concept that these people don't understand is that of compound interest. If you invest your money and give it the appropriate time to grow and multiply, $1 million is a feat that can be achieved by anyone in the world. Now let's say that you're giving yourself 40 years. All you need to do is save up $179 per month and you'll reach your desired figure. Now, when you give yourself 30 years to achieve that goal, that means you'll save $481 per month. With 20 years, you'll need to save $1,382 per month, and with 10 years, that's almost $5,000. The choice is completely yours to make. Now, if you give yourself enough time and let the compound interest do all the dirty work for you, you can reach this figure. You can climb that steep mountain. But the key to this process is to start as young as you can. It all depends on how much time you're giving the compound interest to work on your money. Let's just say that you fail to reach that $1 million mark and you end up short. You think you're lurking somewhere around that $500,000 mark. Are you going to be complaining? That means half of your expenses can now be replaced with that dividend income. This is the money which you receive for doing absolutely nothing. It's not the worst idea to actually have to retire early with that dividend income. And even if you don't get there, you'll still be in a great financial position. That brings us to the second group of people who want more than 30K of dividend income. And that's a fair enough point. The answer to this question is quite simple. You just need to save more, and how much you need to save depends on how much money you want to manage your expenses. Financial literacy has become a subject that needs some serious attention, especially considering that people want to achieve financial freedom. With that comes the understanding of stocks, because without the requisite understanding, you cannot even think of buying these stocks. For that purpose, we've provided a free ebook in the description below which explains the 6 stock categories. Now, it is important to understand that a stock market is a place with immense competition. So the more you know about these stock categories, the better your chances are for you to make profitable judgments in the market. Check out the video we handpicked for you, and we'll see you in the next one.